Hello everybody, welcome back to my channel where we talk all things finance and investing. Today's video, I'm going to talk about the ISA account, which is a tax-free savings account that you'll find in the UK. They're very popular. And in fact, did you know there's almost 5,000 ISA millionaires in the UK? It's a very surprising number. But when you think about a population of around 65 million people, is it really? Well, probably not. So that's the subject of today's video. ISA millionaires, how to get there, and everything you need to know about tax-free savings accounts in the UK. If you're watching this from a country outside the UK, don't worry. A lot of these principles will apply to you as well. If your country has a tax-free savings account, things like in Canada, the US, they have a Roth IRA, for example, then everything we discuss today will be useful to you as well. So stick around, learn everything about tax-free savings and how to get yourself up to being a millionaire status in one of these accounts. Okay, so what is an ISA account in the UK? Well, ISA just stands for Individual Savings Account. This is the government's way of incentivizing people to save money for their future. And what they do is they allow you to invest up to £20,000 into an ISA account each tax year. The benefit of doing this is that anything that happens inside that ISA account, whether it be interest that you receive from your investments, dividends, or just capital appreciation, it's all tax-free. So this is a fantastic vehicle for you for a savings for your future. Can you imagine reaching millionaire status in an ISA account? Any dividends, anything you receive on that would be tax-free. You could basically live tax-free by being an ISA millionaire. So it would be a fantastic goal to achieve. By the way, the £20,000 that you can put in each tax year, how does that compare? Well, if you think about Canada and the US, they're only allowed to put around $7,000 into their tax-free savings account. So this is a very, very generous scheme put out by the UK government to encourage people to save for the future. Okay, so there's basically two types of ISA accounts that you can invest in the UK. A cash ISA and a stocks and shares ISA. Now with the cash ISA, what you're really doing is you're opening up an account with a bank or building society, something along those lines, and you're putting your money into cash. Not very different than when you put your money into a savings account and a bank account. And of course, they will pay you interest on the amount of money that you put in. So that's a cash ISA. With the stocks and shares ISA, on the other hand, you open an account with a broker, investment platform, for example, that offers stocks and shares ISAs. The money goes into that, and then you reinvest that money yourself into stocks, ETFs, index funds, investments like that. You can still do bonds or other things as well, but it is limited to just cash products. So you wouldn't be doing anything with leverage or margin or anything like that, and that's a good thing in my opinion. So a stocks and shares ISA allows you to invest in stocks and shares. Very obvious. Okay, so what are people mainly opening in the UK? Well, if we look at the data from HMRC, the tax authority here in the UK, it's actually pretty surprising and frankly a little bit concerning in my opinion. If you look at this chart here that we've got on the screen, so what we have is the number of adult ISA accounts subscribed to each year, each tax year that is. And of course, the green bars are cash ISAs, and the blue bars, the navy blue bars, are stocks and shares ISAs. We'll focus on those two mainly because they are the more popular ones. But the bit that's really concerning for me is actually the amount of green on the screen. So by far, the majority are opening up cash ISAs and putting their cash into a bank account as their primary savings vehicle for their ISA. Now, while this has its benefits in terms of it being very low risk, it's also very low returns. And we'll see in a minute just how different that is. Now, by looking at this, you can clearly see that people are preferring to the security of putting their money into a cash ISA and therefore putting it into a bank account and just not having the risk appetite to put it into stocks and shares ISA, which, as I say, is a little bit concerning for me if you're trying to grow your wealth over the long term, which is the primary purpose of ISA accounts. Now, if you're doing that and you're investing mainly in a cash ISA, you're really foregoing the opportunity of the compound growth that you get from investing in the stock market over the long term, that is. Short term, anything can happen, but over 5 or 10 year periods, which is really the purpose of ISA accounts, then the stock market gives superior returns with volatility, of course. Okay, now that we see what people are subscribing to, in this case, more cash ISAs. All right, so let's have a look at this second chart. Now, where this differs from the first chart where we saw where people are subscribing to their ISAs, in this second chart, what we're seeing here is the market value based on the particular ISA type. So while people are opening up a lot more cash ISAs, as we saw a moment ago, if you look at the market value of stocks and shares ISAs, there's a whole lot more blue on this chart than there was in the previous chart. So basically, the people who are opening up stocks and shares ISAs, those ISAs have a much higher account value. So this is an early indication that perhaps putting your money into a stocks and shares ISA is going to help grow your wealth a lot better than a cash ISA. But this isn't really surprising when you think about the stock market returns versus bank account returns, and of course the all-important power of compound returns. So what I did was I ran the numbers, okay? And what we have here, look at this chart on the screen. So this chart is how long it would take to become an ISA millionaire, depending on a few different factors. One being how much you're investing each month or each year, and then where you're investing it in the return that you're getting on that, okay? So I put in returns 3%, which is kind of the 25-year average return of a bank account is around 3%. 5%, which is a 25-year return of the FTSE 100, the main index in the UK. An 8% return, and that is the return on average over the last 25 years for the MSCI All World Index. So global stocks, that is. And then the final column over there, years with a 10% return, I've taken the S&P 500, the 25-year return, that being over the last 25 years, has been around 10%. And as you can see, there is a huge difference here in the numbers. So first of all, if you were lucky enough to be able to max out the ISA of £20,000 a year, which is £1,667 a month, then if you put that into a bank account, getting on average 3% return over that period, it's going to take you 32 years to become an ISA millionaire. But the thing is, you've actually got to invest £533,000. So basically, the cost to you is £533,000, 32 years of doing so, and you'll have $1 million. So you're really only doubling your money. Okay. Now, if you're putting in a lot less, I'd say, £5,000, which is around £417 a month, which could be a challenge still, obviously, for a lot of people nowadays. But that's going to take you 53 years and cost you £265,000 if you do a cash ISA and you get an average return of 3%. These are very poor return numbers, not ideal at all. And it shows why you should really be thinking long-term and stock market investing. Okay, great. Well, if you're now convinced that you'd prefer to look at the stock market for your ISA, let's have a look at what the FTSE 100 to do. Maybe you're more comfortable with the FTSE 100 because it trades in the UK. Well, okay, the 25-year return on the FTSE 100 is 5%, as I mentioned a minute ago. So if you were maxing out your ISA, £20,000 a year, done every month, and you got a 5% return, it's going to take you only 25 years to get $1 million. But it's still going to cost you an investment of £500,000. So slightly better than the bank account, but not much at all. And if you scale it down, looking at the numbers, and you go down to £5,000 investment every year, it's going to take you 49 years and cost you £245,000 to get there. So we are seeing an improvement over the bank account, but these are still not great numbers, in all honesty, at 5%. It's a shame that a lot of people are choosing the bank account and cash ISAs over the stocks and shares ISAs, because it's really going to prohibit them getting big numbers in the ISA accounts down the road. But let's look, if you decided to go in a global stock market ETF like the All Country World Index, for example. And global stocks have returned around 8% a year over the last 25 years. So if you've been able to max out your £20,000 ISA allowance every year, and you put it into a global ETF, well, it's going to take you 21 years to become an ISA millionaire, and the amount invested starts to go down, and it's actually £420,000. Of course, the less that you're able to put in, all the way down to $5,000 a year, it's still going to take you 42 years and cost you £210,000. But now, actually, £210,000 out of your pocket, 42 years of time. If you're starting young, this is something that you could achieve. So £210,000 out of your pocket, but you become a millionaire in 42 years. So if you're starting in your 20s, this just shows that you can do this. But you do need to find £417 a month. okay? But it's still doable if you live below your means. Now let's look at the S&P 500. Now that is an index that tracks the 500 largest companies in the US and is probably the most quoted index around the world and one of the most unpopular investments someone can make. Okay, so if you're getting a 10% return from the S&P 500 as it's done over the last 25 years and you're maxing out your ISA allowance at £20,000, it's only going to take you 18 years to become an ISA millionaire, and the total investment will be £360,000. Not bad going at all. And as we work our way down the table, £12,000, £10,000, £6,000, all the way down to £5,000, where it would take you 31 years and only cost you £155,000 out of your pocket over that 30-year period to hit ISA millionaire status. Totally achievable, particularly if you're younger. You could be in your 20s and 30s and still achieve this. So I hope that that's a bit of inspiration for you to get started if you haven't done so. But the main takeaway here is the power of compounding. And the higher your returns and the longer you can let it compound, the easier it's going to be to hit ISA millionaire status. By the way, I previously did a video on why saving 100,000 is so difficult, yet getting up to $1 million actually gets much easier after you have your first 100,000. So I'll put a link in the description for that video so you can watch that, and hopefully that will give you some inspiration to get started and come up with your plan to hit $1 million in your ISA, whether that's £1 million, $1 million, whatever for your saving. But have a look at that video link in the description. I thought I would put up a chart by Vanguard as well, which I think gives another visual and just the difference here. So this is 25 years of maximizing your ISA allowance, investing in the stock markets versus cash. And the stock market is the green line that you see here. So if you invested in a stocks and shares ISA, and they use the MSCI World Index, again, global stocks like we saw above, in and around 8% return. And if you did it just putting it into a cash bank account, that is this kind of amber line across the way. And as you can see, by the end of the 25 years, which they've gone up to March 2024, the green line is so much higher. You would have around £898,000 in your stocks and shares ISA if you had maxed it out and did it for the past 25 years, versus your bank account cash ISA at only $360,000. So more than double that you would have by investing in the stock market versus putting it in a cash ISA in a bank account. I think this chart really drills it home as well in terms of the difference. Okay, so now we've seen the power of investing in the stock market for your stocks and shares ISA. So a couple of things to keep in mind if you're ready to make the leap and go with the stocks and shares ISA, particularly now that the deadline is coming and maybe you're looking at this because it is ISA season here in the UK. So one thing you want to consider, you want to make sure that you're keeping your costs absolutely low. Open up your account with an investment platform in the UK and make sure your fees are low. Then when you have your account set up, you want to invest in a low cost index fund or exchange traded fund that is going to keep most of the returns in your pocket rather than in the fund itself. So you want to be looking at funds or ETFs that are doing, maybe 0.1%, 0.2% at the most. That should be all you're really paying in a fund or an ETF to invest in. Keep those costs low. Otherwise, your returns come down because a lot of it gets eaten up through the costs. The second tip you want to keep in mind when you do this, you want to make sure that your dividends are getting reinvested. A lot of these exchange traded funds, index funds, pay out dividends on a quarterly, maybe even a monthly or biannually basis. Make sure you set it up and you tick that box with your broker that any dividends automatically get reinvested. That way it gives more time for the compounding to happen. Dividends reinvested are absolutely key here. Number 3, don't be tempted to be trading all the time. It's not in your interest. You're just going to rack up more fees and it's just going to take away from your performance. Take a buy and hold long-term strategy. Number 4, don't worry about volatility. Volatility is part of stock market investing. It just comes with the territory. That's why you're getting your 8 or 10% versus your 3 or 4% with putting your money in a bank account. Ignore it. Turn off the news. Stay away. Don't bother with it. And whatever you do, don't let it get to you to the point where you panic and you sell your stocks because you're afraid. It's the worst thing you could ever do. So just ignore all of that stuff. I recently did a video on what to do when the market's volatile and it's selling off or crashing. I'll put a link in the description for that one as well. So have a look at that and that will help you deal with those scenarios of market sell-offs. Another tip, invest every year regardless of conditions. It doesn't matter. If you're working and you're getting a paycheck, then make sure you're putting your money in. Just because the market's down 5 or 10% doesn't mean that you stop your investments. Quite the opposite. You may want to ramp it up. Investing when the market down can help boost your returns for sure. The best way to do this, automatic investing. When you set up your brokerage account, I suggest you pick one that offers an auto invest type of feature and just turn this on and never ever turn it off. Just let it go. So when you get paid, you're actually paying yourself first and investing in your future first. And that's going to reduce the chances of you spending that money first. Another tip that you need to keep in mind when you do this, as you go through your working life, you're going to get raises. Your salary is going to go up. Maybe you change jobs or you just get offered a raise. Rather than taking that money and all of a sudden enhancing your lifestyle a little bit, known as lifestyle creep, take that money and add it into your stocks and shares ISA, or at least half of it, or 75%, for example, the most that you can do. So that way, all of a sudden, you're now investing more every month, and hopefully you can get yourself, if you're not already, get yourself up to the £20,000 limit or as close to it as you possibly can. If you're nowhere near that, don't worry. Do not let that put you off. Just get in as much as you can and keep it going for the long term. We've already seen the power of compound returns, so take advantage of that. So that's my video on investing in a cash ISA versus a stocks and shares ISA. In my own opinion, I think cash ISAs, although they have some benefit for short-term investing, they kind of do a disservice to the population overall, because as we've seen clearly, people are going to invest in their cash ISAs far more than they are stocks and shares. They feel more comfortable with it, and therefore they're missing out on the stock market returns and the long-term gains. You're probably someone that's going to be working 30, 40 years. Can you imagine looking back in 30, 40 years time, saying, running the numbers, if only I had put that money into a stocks and shares ISAs versus a cash ISA? You could be one of the 5,000 people who are now an ISA millionaire, meaning you could draw an income of 30, 40, 50,000 pounds a year and not even have to pay any tax on it. Can you imagine that? Time is on your side if you're young, so don't put it off any longer. I hope you liked the video. I really enjoy producing content like this. If you like the video, why not click on the like button to help me get my content out to more people? Subscribe to my channel if you haven't done so already, and leave me a comment. Tell me what you think about cash ISAs versus stocks and shares ISAs and what you're investing in. Any concerns or questions you may have, I'll do my best to answer them in the comment section, so leave it there. By the way, if you want to know what I do in my portfolio and what I invest in, well, I've done a video on that recently, and I put a link to that right up there. So just click on this video right here to see what's in my portfolio, my one fund portfolio that is. I'll see you over there. And as always, I wish you nothing but the best in your savings and investment journey.